For more than a month now, international petroleum prices have been on a gradual decline, attributed to slowdown in demand. In the local market, however, the petroleum pump prices have been on a steady increase for nearly 6 months, with the latest price announcement by the Energy and Petroleum Regulatory Authority, which did not reflect the continued decline in international prices, being blamed on an increase in landed costs. Now tonight, we bring you the trends in petroleum prices both locally and globally, as questions abound while the pump prices are declining in the region but rising domestically. Here's our numbers cruncher, Sam Gitugu.
The petroleum prices announced by EPRA on Tuesday remained far much the same for Super Petrol, with a marginal decline for kerosene and diesel. EPRA attributed it to rising landed cost of diesel and Super Petrol, with a marginal decline for kerosene. For the fourth week now, the Central Bank of Kenya has been reporting reducing global petroleum prices that are now lower than they were 6 weeks ago, on the week ended 20th September, by nearly $16 a barrel. In its weekly bulletin, CBK says, quote, that international prices declined during the week ending Thursday last week as demand concerns persist, coupled with dissipating impact of the war between Israel and Hamas group. CBK says that Marban oil price fell to $81.59 per barrel on November 9th from $87.24 a week before. According to monthly releases by EPRA on petroleum prices, the international prices have been fluctuating over the last 6 months, falling drastically in the month of October. In October, the prices dropped to $804 per metric ton, the lowest since May this year. But that decline is yet to reflect in Kenya. According to EPRA, the landed cost of Super Petrol has been on a steady rise to stand at $827 per metric ton, the last reported landed cost by EPRA, and that is reflected at the pump. The calculated price of a litre of petrol has risen by more than 47 shillings since June on account of increased taxes, changing exchange rate against the dollar, and more importantly, the landed cost. Despite the decline in global oil prices, a litre of petrol has been calculated to retail at 229 shillings before a price stabilization component that lowered it to 217 shillings, maintaining it at the same rate as published last month. For the first time this year, EPRA has indicated that, quote, in this review, the cargoes that have been factored were priced based on the average September 2023 Platts price, which was much higher than October 2023. EPRA said these are cargoes that had discharged at the port of Mombasa between 10th October and 9th November 2023. This suggesting that Kenya's current stock was bought before the international prices decline that started in September. In previous announcements, every increment in landed cost has been matched with pump price increment. International prices decline has similarly been matched with a local pump price decline, at least in the subsequent month. The depreciating shilling against the dollar has not helped the case for Kenya. Between April and October this year, the shilling, according to EPRA, has lost over 16 points to settle at an average of 155.64 against the dollar. It appears that the earliest Kenyans can reap from the global price fluctuations that began in September could be mid-December, were EPRA to base their calculation on oil ordered after September. EPRA says that in reducing the pump prices against actual calculations, the National Treasury has identified resources within the current resource envelope to compensate oil marketing companies to cushion consumers from increased landed costs. Sam Gitugu, Citizen TV, Nairobi.
All right, Gitugu, thanks so much for that.